Hi friends, I'm Varun Agarwal from LegalGain.com. Today we are going to discuss the types of audit under GST. As we see that under GST also, the taxpayer or the SSE is assessing the tax on his own and paying it to the government. So that brings in the requirement of audit by the department or a professional. So what the department or the professional does is he checks your books of accounts and records and compares that with the GST returns you have filed and taxes you have paid and ensures that you have paid the taxes correctly. What is the meaning of GST audit? Section 2, subsection 13 of CGST Act 2017 says audit means the examination of records, returns, and other documents maintained or furnished by the registered person under the GST Act or the rules made thereunder. That means whatever records, returns, or documents are maintained or furnished by the taxpayer are checked under the GST audit. The verification of correctness of the turnover declared, the taxes paid, the refund claimed, and the input tax credit availed, and to assess his compliance with the provisions of GST rules made thereunder. So here the auditor he checks the correctness of the turnover which you are declaring in your GST return, whether the tax calculation as per the turnover is correct. If you are claiming any refund in GST, whether your refund claim is correct or not. If you are claiming any input tax credit, is that credit calculated correctly or not? And various other provisions of GST compliance are done or not is checked under GST audit. There are three types of audit under GST. Section 35 of CGST Act requires a chartered accountant or cost accountant to do a GST audit based on the turnover of the SSE. Section 65 of the CGST Act requires a tax authority. If the authority feels there's a requirement of an audit, then the department gets the audit done under Section 65. Under Section 66, a special audit is being carried out by a professional on the requirement by the department. Now let us see these types of audits in detail. The first type of audit is audit based on turnover by a CA or a CMA. Applicability. Every registered person whose turnover during the financial year exceeds the prescribed limit. So every registered person whose turnover as per Rule 80 subsection 3, Rule 83 exceeds 2 crores is required to get an audit done by a CA or a CMA. Now, what are the submissions? While submitting the audit report, SSE shall also submit a copy of audited financial accounts. The reconciliation statement is also to be submitted along with the books of audited financial accounts. Now, what is a reconciliation statement? Reconciliation statement means SSE has to reconcile the value of supply declared in the return file for the financial year with the audited financial statements. That means the SSE has to compare the turnover or the supply declared as per the GST return and prepare a reconciliation comparing it with the financial statements, audited financial statements, and submit that along with the audit report. Now, what is the meaning of turnover? Turnover here means aggregate turnover. Aggregate turnover means value of all the taxable supplies excluding the value of inward supplies on which reverse charge concept is anyway removed now. So value of all the taxable supplies, exempt supplies, export of goods and services or both, and interstate supplies of persons having the same permanent account number. That means all these things have to be aggregated and the turnover to be considered for that limit of audit is the total of all this. If you are dealing with multiple products, the aggregate turnover of all the products, and if you are having multi-location, The aggregate turnover of all the locations under the same GST registration is considered for the purpose of applicability of audit. The second type of audit is by tax authorities under section 65. Now, who has authority to conduct this audit? Commissioner or any officer authorized by the commissioner may undertake audit of any registered person by passing general or specific auditor. General or specific order. Commissioner or any officer authorized by the commissioner may undertake this audit. What is the criteria? Criteria is generally if the monetary limit of input availed or the SSE is making a lot of defaults, or they may decide to conduct audit of any specific industry at any point of time. So there are different criteria based on which the department may choose to conduct these kind of audits. Conduct of audit. To conduct the audit under this section, the registered person shall be informed by way of a notice not less than 15 days notice is to be given to the registered person or the taxpayer before conducting this audit. And the audit shall be completed within a period of 3 months from the date of commencement of audit. In some situations, it can be extended for a period not exceeding 6 months. On conclusion of the audit, the proper officer within 30 days informs the registered person whose records are audited about the findings of the audit. The department will inform the taxpayer about the findings of the audit and obligations and the reasons for such findings. That means the SSE has to be informed, SSE has to be made aware what was the outcome of the audit being conducted by the department. The third type of audit is audit by a CA or CMA as a special audit on the instruction of the department. When is this conducted? If any stage whether if there is an assessment going on by the department, scrutiny, inquiry, investigation, or any proceedings, the officer not below the rank of assistant commissioner, having the nature and complexity of the case, is of the opinion that the value is not correctly declared or the credit is not availed or any such reason, that officer may direct such registered person by a communication in writing to get his books of accounts audited by a CA or a cost accountant nominated by the commissioner. That means during any kind of assessment proceedings, scrutiny proceedings, the department officer not below the rank of the assistant commissioner will direct the SSE to get his books of accounts audited or checked, examined by a CA, and that CA is nominated by the commissioner himself. What is the time limit? Such auditor will submit the report within 90 days. This can be extended further by another 90 days. Opportunity of being heard. The registered person shall be given an opportunity of being heard in respect of any material evidence gathered on the basis of special audit under this section. That means the SSE has to be given an opportunity of being heard. The SSE may justify the reason or the findings of the audit, and the department is bound to listen to the SSE and give him an opportunity of being heard. What are the consequences when the special audit is conducted under this section? Results in detection of tax not paid, short paid, or erroneously refunded, or anything of that sort. Penalty proceedings can be initiated under section 73 or 74. If the department finds anything wrong or any tax evasion by the SSE, there can be penalty proceedings initiated by the department. So these are the types of audits under GST. As we have seen, the first one is by a professional, that is applicable to all people with a turnover above 2 crores. And second is by the department. Third one is a special audit by a professional on the instruction of the department. Thanks for watching, and if you have any questions, please leave a comment below. If you like this video, hit the like button. Subscribe to our channel, and for any queries, you can also get in touch with us on our email ID hello@legalgain.com. If you want us to make more videos and on any specific topics, you can leave a comment below and we would be more than happy to create videos for you. Thanks for watching. Have a good day.